The Nasdaq 100 gapped up overnight on Sunday, following talks over the weekend which saw UBS acquire Credit Suisse for $3.2 billion. In return, UBS was provided with a $100 billion credit line from the Swiss National Bank in support of the takeover. Make no mistake, this was a forced takeover, with the Swiss government pressuring UBS to merge with Credit Suisse. The Swiss government also granted a guarantee to UBS to assume losses of up to 9 billion Swiss francs from certain assets. In addition to this, global central banks provided additional liquidity via USD swap lines. The Fed and 5 other central banks, ECB, Swiss National Bank, the Bank of Japan, Bank of England, and the Bank of Canada, to boost liquidity in their standing US dollar swap arrangements. You can see from this chart the Fed balance sheet expanded for a second week by nearly 100 billion, as central banks tried to inject liquidity into the market. However, the gap up was filled pretty quickly as the Nasdaq 100 turned lower on Monday. You can see from this chart the cost to insure against UBS jumped after credit rating agency S&P cut UBS's outlook to negative. This was following the deal with Credit Suisse, citing execution risk given the size of Credit Suisse, the complexity and the risk profile of the bank. Despite the volatility, the additional liquidity provided by central banks did help, and the Nasdaq once again held against 12,455 support level. On Tuesday, price retested the near-term trendline resistance, with this short-term trend connected to the high from the start of Feb. This headline was also a driving factor for the rally on Tuesday, as Treasury Secretary Janet Yellen said the US government could step in to backstop more deposits if necessary. Wednesday was the main event, Fed Day, with the market expecting a 25 basis point rate hike at best. We got the 25 basis point rate hike as expected, but it was the language in the Fed's statement that changed, hinting that rate hikes are almost done. The Nasdaq 100 rallied into the 12,940 resistance level, a level we called out in the last video. Price reversed sharply off this level, and it was Janet Yellen this time that sparked the sell-off rather than Powell. Her comments around the US government not currently working on a blanket insurance for bank deposits did not go down well and caused nervousness. Price retested the 12,655 support level. Thursday saw a similar pattern with a sharp reversal as price retested yet again the key support level of 12,655. The last 2 trading days have seen reversals, which has created topping tail candlesticks. This is likely to set us up for further downside into next week. For now, 12,655 is a key support area, and the selling will be capped until this level is breached. On the upside, 12,940 remains key resistance. Downside levels to watch below: 12,455, followed by 12,195. Now today, attention has turned to another European bank, with Deutsche Bank now targeted. As you can see from this chart, the credit default swaps of Deutsche Bank spiked, whilst its share price has plummeted. We are not done with the banking sector weakness, and it's unlikely traders will want to hold onto risk assets into the weekend, especially after what happened last weekend with Credit Suisse. We are likely to see further volatility and downside in the next week in the Nasdaq 100. Therefore, trade with caution and adjust size accordingly. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.